Good morning, everybody. Today is the 31st day of January 2022. My name is Heritage Adisa, market analyst at HotForex. And quickly we'll check through the markets, see what the dominant sentiment is, see if the opportunities, and then how we can take advantage of it. But please remember that this is just a communication material, and nothing in this communication contains or should be considered as investment advice or investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. What we have this morning in terms of the overall market environment is a more positive start to the day, to the week. We have equities holding on to Friday's gains as well as Thursday's gains as well, right? Keeping sentiment overly supported amid month-end trading. Yes, there are still risks markets. We still have, markets expecting about 4 Federal Reserve, rate hikes this year. I'm also turning hawkish on all the central banks, expecting a rate hike from the Bank of England this week, expecting the ECB to turn a little bit more, hawkish, expecting the RBA to also stop QE totally, right? All of that, yes, are still risks for equities. Apart from that, we still have the Ukraine-Russia tension still very much, in play, right? But I wrote here, I said the downside we've seen all month is seeing some reprieve, seeing some, pullback, seeing some, exhaustion. Because at the end of the day, if you look at the whole month, right, throughout the month of January, markets have really been, worried about all these factors. We've been pricing into markets, we've been, selling risk assets, equities on the back of that. But at some point, all of these fears are bound to wane, right? Profit taking is bound to come in. And what better time than month end or towards the month end? I had this written, I said, equities hold on to Friday's gains, yes. But although the intraday gains are still limited, right? So in as much as, yes, we have a positive start, you need to also be aware that, the upside we are seeing currently, especially on the equity side, is not that much to hold on to. Yes, US 100 node is higher. Oil, for example, now US oil jumped higher, gapped higher to start the day, but so far we're trading back within a range, back at flat levels. Right? Yes, despite we still have concerns, on supply constraints, following yes the tension from Russia and Ukraine. Obviously, that could also cause supply constraints to also shrink, to also continue. There's that, but so far overly, right? We still have oil prices overly supported, right? The VIX itself has made its way lower, which is a good thing for equities. As some of all those worries wane, right? On the bond side, we have flat trading mostly. The dollar index also grinds lower so far today, but the margins are still very marginal and still well within Friday's ranges that we had. On the cumulative strength side, we have the Aussie and Kiwi leading the FX majors, even the card, commodity currencies, high beta currencies at the top of the majors, while on the weak side we have JPY, CHF, and then the dollar lagging behind, lagging behind major FX, right? All of this also points to a more positive environment to start the day. Biggest mover so far, AUD JPY is up about 0.83%. Technically, we're going to look at that now in a bit. And on the calendar is mostly a light one, really. Yes, European, GDP expected, but apart from that, nothing too much to hold on to. Running over to the markets, right? I remember on Thursday when we had our video last, we talked about, us approaching key levels of support. This was Thursday around here. I said it was a key level of support. I wanted to be very, very watchful about this level. On Thursday, we had a jump to the upside. Later during the day, we came back against that level on Friday, and we also held, and then we also pushed higher. Now, what this has shown us is currently now we're now trading within a range, or we have really, just been hovering around this range. Yes, we saw a little nudge higher in today's session, but nothing overly convincing such now. And then in month-end trading, heading into, markets trying to reprise the downside we've had all month, we could see some form of pullbacks, first of all, which we've already seen, but it could extend. And then because the risks are still very much in play, it could still simmer down. So for now, I'm still being very patient on this one. It's just Monday, right? The week is still very much long. We still have central bank meetings to latch onto. So for now, I'm keeping a little bit more prudent because of the range that we're seeing so far and the failure to push lower or even grind higher amidst the risk that we have currently running. For the NASDAQ as well, also a similar story. Friday, we talked about this. On Thursday, we talked about these lows. We said it was a support level and wanted to be very watchful and mindful about it. And then we can see even on Friday as well, we still bounce off the level, still capped by the 14,500 level, right? Like I said, so far, the intraday upside that we've seen has not been overly convincing. I mean, we could call this just flat moves, right? So until we see something more tangible, I'm still going to be more prudent on this particular one as well going forward in the day. And that's mostly what you see across the equity space. For the VIX, right? The VIX has pulled lower. I remember posting something like this, and it was on Twitter, where I said at these levels we were seeing, downside seem more, appropriate at this level. Now, yes, we had a couple of rates still push us back up, but you can see we've not been able to keep above 30 level. And now in today's session as well, we are back towards 26.5 level. Yes, I would like to see markets fall back below 20 to give me more confidence that fear is weighted, has weighted in the market. But for now, fear is still elevated, but we are seeing a little bit of, relaxation in markets, right? A little bit of downside in terms of fear, in terms of the VIX, like we are seeing. For the bond market, trading mostly flat intraday, right? The risk on environment obviously should see bonds even head lower, but for now we're seeing it, trading mostly flat and even looking towards, slight upside so far. So it more or less just puts the overall sentiment in more of a balance, more of a tricky spot. We still need to consider all of the moving parts like the Russia-Ukraine story, central banks really major focus. And we had Fed member Bostic early, I think it was either late yesterday or early this morning, saying that he wouldn't have a problem with 0.5 50 basis points rate hike in the next meeting, right? Which is a lot hawkish. Apart from that, he said he wouldn't also mind if inflation calls for it. He wouldn't mind rate hikes at every meeting going forward, which is also overly hawkish, right? Yes, markets, we need to see what other central bankers think about that. But in terms of Bostic, right, he's not a voter for now, right? And then I think till 2024. Apart from that as well, he's always been very hawkish. So I mean, a hawk coming out more hawkish is more or less not something to surprise markets, right? Would have gotten a bigger reaction if he was a dove. Or let's see how other central bankers, comment on that particular one and see, what they feel about inflation, about rate hikes going forward. For oil, like I was mentioning as well, yes, we had a gap to the upside, but mostly right now we've not done so much. And if you look at the mostly messy price action we've seen in recent time, right, I'm a bit, very cautious of this. I'm not in a hurry to jump into markets. Overly, we're still very much supported. Notwithstanding, because we have, supply constraints, talking about Russia, Ukraine as a new worry. Coming for the month really, but as a new development, it was previously COVID. Now we have that to contend with. But you can see trading very close to the highs after the massive rally we had, all through the month. I mean, profit taking might not be ruled out. So right now, not much going on. And because of that, I don't want to be saying jumping into anything just yet. For the currency space, we have the Aussie leading the FX majors. We have the Kiwi following suit. We have CAD also strong. We have JPY pressured, CHF pressured, as well as the dollar. Now, looking at strength versus weakness, starting with the AUD JPY pair. Currently in today's session, we've made a lot of headwind to the upside, pushing higher about 0.93% so far on the day. Not up to the ATR yet, but obviously super strong. And we've cleared out, let me clean this up. Right, we've cleared out the previous lows that we had from last week, coming from Tuesday and Thursday as well, right, around the 81.00 level, right? We more or less broke above that level, came back to test a bit, and now we're pushing higher, right? In terms of next resistance levels, we could look at this next round number as a key one to watch out for. Previous lows, highs here and there. Very messy one, but obviously that if I wanted to take this, I'd like to see some form of pullback, maybe towards, the 50 moving average here around this round number before looking to take further upsides on this one. But I'm still being a lot more cautious on this. Apart from that, we need to be very, 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 mindful of this overhead trend line coming here as well, where we're currently trading at, right? 1, 2, 3, and now we are there. So in as much as we could like this to the upside in terms of the current environment, considering the moving parts, considering, Monday, considering all of those things in play, I would really, really want to see some form of pullback here. And I wouldn't even still be very much in a hurry to jump into something like this. We look at AUD CHF as well. Similar story there, upside on the day, intraday, in line with the current sentiment. Now we have already cleared out, or we're clearing out this round number around 0.655. You can see previous highs, lows as well around this region, right? We could look at this and say, yes, upside in terms of the current market environment that we have currently. But like I said, I still want to be very, very, mindful about as well. Also take note of this overhead trend line, right? Coming from let's say the highs of 20th of January thereabout. So obviously we have all of this to contend with. Yeah, we could look at further upside on this particular one, but we've already met ATR so far already. I'm just a little bit very cautious on something like this, really, before looking to jumping on anyone. For AUD USD, interesting one there, right? We are also bouncing off this key previous support coming from, I think, early December thereabout, right around the 0.7 level. Also bounced off it already currently into this session. You look at coming from Friday, really, you look at where we are currently. Yes, we've had a lot of downside in the week. I mean, we could see a lot of further upside here, but if I wanted to take this as well, I would like to even see a clearing out of this Friday's highs. That could maybe give me more confidence for that, or maybe a pullback towards a round number around 0.70. You can see previous highs, America high going back to Friday. Yes, but like I said, all of those moving parts are still things to consider before looking to take any one of these trades. On the NZD side, also an interesting one as well, upside in terms of the current environment, even though there's a lot of things to be worried about, already overbought here on the stochastics here, right? But still with all of that, we have the moving averages to contend with, the hourly moving averages to contend with. We have, the round number around 76.00, previous support levels, as well as resistance on Friday to contend with on this particular one. So upside currently risk on, yes, but all of these factors are keeping me a little bit more numb. You look at current trading, it's really not just about taking the trade, it's about taking the best trade. So when there are a lot of things that could go wrong, a lot of things to be concerned about, a lot of worries, a lot of potential caveats to be worried about, I'm always more inclined towards sitting on the sidelines and waiting for clearer opportunities, opportunities that don't have any or little or less risk in them, right? So we have NZD as well, also want to watch out for on the technical side. You look at NZD USD, similar story there as well. The downside we've seen all month have been super strong. Yes, risk on, yes, pullbacks. I mean, this is something to watch out for. We could get it, but like I said, I just been a little bit more numb. It doesn't mean I can't take it, but I like to just see more confidence or grow in more confidence before looking to jump in on any one of these trades. On the calendar, like I said, it's a light one. Yes, we're expecting GDP for Europe, quarterly GDP, month on month, sorry, quarter on quarter, as well as year on year for Q4, right? Not expecting so much from this particular data point. I don't expect so much. I don't think it should change, the ECB's current stance. Yes, we're expecting weaker numbers on the quarterly side, but better numbers on the yearly side. But more or less, this isn't expected to give much. I think heading into month's end, I think markets could just have repricing ahead of central bank meetings like ECB, like the BOE. Also have profit taking could come in play. But for now, I'm going to be more prudent, watch out, and then watch sentiment, see if we can get, something stronger. Maybe equities, for example. Equities give me more confidence, continue to push higher. Then I'd like to see Aussie more strength against JPY. I'd like to see NZD strength against JPY. But until we get that, I'll be a little more prudent on this particular one. So that's it for now. Thank you very much. If you have any questions, please do not hesitate to ask. I will always do our best to help. Thank you. Do enjoy the rest of the trading session. Bye for now.